The pandemic going on, there's a lot of uncertainty. And a lot of investors in real estate are actually calling it uncertain times. But is it really? Because the most savviest investors know each phase in the real estate cycle. And they actually use the cycle to match their investment opportunity. But today, I'm going to show you exactly what the 4 phases of the real estate cycle is and how you as an investor or a wholesaler can win on the up or the down. So you're probably saying to yourself, Max, what kind of magic ball or magic something do you have to be able to predict what's going on in real estate? The reality is, I don't. That's not even what I'm trying to say. But the most savviest investors understand the cycle. The cycle has 4 phases, and a cycle will be able to tell you whether the opportunity you're looking at right now is actually good investment or not. It'll tell you whether you're supposed to be making capital improvements on a property that you currently hold or not. Should you be doing discounts on rent? Should you be trying to offer concessions on properties or not? So understanding the cycle of real estate and the 4 phases included on it is going to help you tremendously. It's what makes the difference between a good investor and a great investor. All right, so now I'm going to tell you the exact phases of the real estate cycle. It's 4 of them. Number 1 is going to be the recovery stage. Number 2 is the expansion phase. Number 3 is the hyper supply phase. And the number 4 that we all hate or love is the recession phase. So we're gonna dive deep into the recovery phase. Now the recovery phase is kind of crazy because this is where real estate's gonna be at its lowest. Unemployment is gonna be at its highest, and foreclosures are gonna be at its highest as well, which I think we're gonna see that in the near future. So in the middle of the recovery phase is actually when the prices of real estate start to stabilize. What's also cool, if you are an investor, this is a core investor. Typically, core investors mean they invest strictly for income. If you're a core investor, this is the perfect time to pick up a property right now. This is also the time when new construction starts in the recovery phase. So an example of a company taking advantage of the recovery stage is a company called Blackstone, who bought a lot of property during this stage. And essentially what they're going to be doing is buying property at record low prices, stabilizing the property and the rents, waiting to sell it at a later date. Now that is important to understand, and this is where your big buyers, big money buyers, are going to be buying property in the recovery phase. All right, so in the next phase is called the expansion phase, which I believe we've been in this phase for the last 11 years. So immediately after the recovery phase, we roll into the expansion phase. Now this is a great thing because unemployment numbers start to take a dive, which means more people are gainfully employed. During this time, home prices are gonna go up. Also, rent is gonna go up as the occupancy rates improve. Now, this is the perfect time for your value add type investors. And what do I mean by that? Your fix and flippers, people that are gonna buy properties at a certain price, improve the product, and then sell them. This is also at the peak of the expansion phase is when is like a great balance for houses being on the market. You're gonna add a house, sell a house, add a house. There's a good push and pull when it comes to inventory of houses on the market. So during the expansion phase, remember, if you bought a property during the recovery phase, this is the perfect time for you to start doing improvements on your rental properties or your commercial properties. You're probably saying, why? Well, obviously because the unemployment rate's going down and rents are on the rise because the vacancy rates are improving, this is the perfect time for you to start adding small things to those properties, such as fixing them, expanding them, whatever it is, to take advantage of the stabilizing rents. So at the height and the tail end of the expansion phase is when it actually becomes more difficult for wholesalers to find those rock bottom prices so they can pass those on to the opportunistic investors. And what I mean by that is simply investors who get the properties that are very, very deeply discounted. They can do some value add and move on. Right now, it is almost like a seller's market. So this makes it very hard for wholesalers to go out there and find properties and investors to find properties that are very, very on the cheap end. And this is in the height and the tail end of the expansion phase. So the next phase we're going to talk about is the hyper supply. The hypersupply gets everything from the expansion phase. Now, if you remember, during the expansion phase, the flippers were flipping, so wholesalers were finding all of these properties in the beginning and the mid-level of the expansion phase and supplying it to all these fix and flip investors. And also all this new construction was going on. Everywhere you turned, a new neighborhood was being built. Well, unfortunately, something during this actual hyper supply phase, something in the economy started to slow the demand down for houses. Essentially, all this stuff was still on the market, but the demand wasn't there. It could be unemployment rate starts to go up or something happens. But during this phase, as we call it the hyper supply, too much product on the market. And this is what we call a buyer's market. And for houses, then there was supply. And in the hyper supply stage, it's exactly the opposite, meaning that there's so much inventory online that the demand is low. Now think about this in the real world concept. When you're in the expansion phase and you're a flipper, you're usually getting multiple offers for each property. During the actual hyper supply phase, it's the complete opposite. So now when buyers are looking, they're visiting 10, 12, 13 houses on a weekend versus when you're in the expansion phase, they only have time to visit 2, maybe 3 properties, and you're gonna get multiple offers on your property. But now we're in the hyper supply, so the prices have to start dropping to meet the less demand of real estate. This is creating an influx of properties on market, houses for rent, all of this stuff. Now check this out. If you're a savvy investor during this hyper supply phase and you have large commercial buildings or you have apartment complexes, this is where you start to sell your property to other people that don't know the 4 phases of real estate. But if you have strong rent rolls and long leases, most of these core investors decide to ride out the storm in the hyper supply. Now keep in mind, hyper supply can last a long time. So the next phase we're going to talk about is the one that most people hate and few love. And let me tell you why. This is called the recession phase. Typically, everything is out of whack. There's so much supply on the market, zero demand because of unemployment rates, whatever's going on in the economy, there's literally no demand. So here's what happens. During the actual hyper supply phase, you start to see banks, like we typically just seen Chase Bank, say, hey, we're gonna tighten our standards for the loan. Typically they're saying, hey, now you gotta have a 700 credit score and 20% down to be able to qualify to buy a home. Now with that comes less people have 700 credit score plus, less people have the 20% down, essentially decreasing the demand for houses because less people can actually purchase. Does that make sense? That is why the recession starts to go over and over again, and the supply is so much higher than demand. This is typically all new construction done. It stops. Nobody's building anything during this time. And this is when you're actually gonna see recessions. Now I know you guys can think back if you're old enough when they had apartment complex waving flags outside saying free Wi-Fi, free cable, first 3 months are free, bring a friend, save $400, all of those things. So this is when your large landlords and your commercial property owners start to offer concessions, basically giving you free months of rent, free this and free that. They need to keep their occupancy rate at a decent level in order to meet that core investment that they invested in earlier. So you're probably saying, Max, so who likes the recession phase? Well, obviously the opportunistic investors. And these are typically people like Blackstone. I know I told you that during the recovery phase, they were actually buying, but they started buying in the recession phase. And let me tell you why. Because this is when they buy assets and foreclosures at rock bottom prices, stabilize it, and then start to sell these same assets early on in the expansion phase. So if you as a wholesaler can find people that actually have cash that have been waiting for this. Now think about this. They're gonna buy properties at 30 cents on the dollar, 40 cents on the dollar, stabilize them with another 10 cents, and then sell them for 70, 80, 90, even 100 cents on the dollar during the early expansion phase. That's genius. That's what most of these huge funds, huge guys look for, is the recession. Now, nobody wants to pray or hope a recession comes, but this is when the rich actually become wealthy and where the wealthier become wealthier, if that even makes sense. So if you know the 4 phases of real estate, then you'll understand the entire cycle and you know exactly what you can do in each one. So next, we're going to be talking about what you need to be doing as an investor or a wholesaler in each phase of this cycle. So right now we're in the recovery phase, and depending on what type of investor you are, I'm going to give you a strategy that's going to help you see out this recovery phase and somewhat be successful. So if you are an opportunistic type of investor, and what I mean by that is you're the riskiest of them all. Typically, you're going to buy the most complicated type of projects and don't see a return in 2 to 3 years. This strategy is going to be for you. If you catch early on in the recovery stage, you can still buy some properties at great prices. Now, what you're going to do is you're going to hold on to this property typically 2 to 4 years so that you can sell it early on in the expansion phase. So typically what that means, if you are a risky investor with deep pockets, what you're going to do is going to buy something that needs some fixing, get it fixed up enough to be able to rent it, hold it for the next 2 to 4 years, and early on in the expansion phase, you can dump this property for a large profit because the demand is high for properties just like this. All right, so during this recovery phase, if you are a core type investor, typically investing for cash flow, this may present itself as a great opportunity for you. This is when you can buy those Class A spaces, basically the best of the best that have some decent rent rolls and strong timing so that you can wait this out, because during that expansion phase, you are going to take advantage of the increasing rents and the long-term leases. So if you're looking for core properties, this may be the perfect time during the recovery phase for you to pick those up. All right, so right now we're in the expansion phase. So typically what this means is there's an upswing. There's more demand for rental property and space, and there's also more demand for primary residence. Now, if you're a developer, this is the perfect time for you to actually start building. Here's why. Because the moment that you can deliver this project, the demand for rent is already high, so you're gonna be able to stabilize that development very, very quick. You're also gonna be able to, as a developer that's doing single family homes, you're also gonna be able to sell these as soon as these things hit the market, because the expansion phase is when there's more demand than there is supply. So this is perfect for you guys as a developer. Now, if you are a fix and flipper during this time, this is absolutely perfect for you, because there's still enough distressed situations where you can pick up property at a low price, do the fixing up, and sell it retail. Now, here's the thing. A lot of people think during the expansion phase, you got to do A+ type rehabs, but it's actually the complete opposite. When you're doing rehabs during an expansion phase, you can get away with these C+/B type rehabs. And I'm going to tell you why. Because the buyers are going to be looking at less properties because there's not enough of them available online. So essentially meaning that they're going to overlook some things that they may really want, because now that they're visiting properties, they're having to make offers in less than 24 hours before they get snatched up. So if you are a flipper, this is the perfect time for you to still find things in the rock bottom prices, add some improvements, and put them online on market and sell them very quickly without having to do top-end, high-end rehab stuff. All right, so the part we're in now is called hypersupply. Essentially, we already talked about it, but there's too much inventory online. Too many houses for sale, too many places for rent, too many office spaces for rent. So essentially what's happening, the demand for these properties are gonna go down. This is typically gonna be, like I said, when something in the economy starts to make that shift. Now that we have that shift, if you're a core investor, investing just for cash flow, typically this is when you're going to be selling your properties if you have any lease renewals coming up, or if you have anything that kind of makes a shift. Here's why. Because there's less of demand, the prices are going to go lower. But if you have good, long, stable rents in the commercial side, or if you have great tenants on the residential side, then you're fine. You're probably going to be able to hold out this period 3, 4, 5 years, however long it lasts, so that you can still stabilize your portfolio. So if you're a core investor, you may want to sell, or you may want to hold on to it if you got some great leases and some great tenants. All right, so during this hypersupply phase, if you are an opportunistic investor, this may be good for you, but you got to keep your eye on the streets for this one. Typically, for people in this hypersupply that are not equipped to handle what's gonna happen, they may hit the panic button. So for example, if somebody's over leveraged in their asset and can't handle the small margins they predicted because we were in the expansion phase, they may hit the panic button, and you may actually see these same properties go up for record level sales. And what I mean, not record on the high, but record on the low. And these prices may actually reflect something very similar to a recession. So keep your eye on the market, look for these people hitting the red button to get out of these assets and scoop them up because you're in a better capital position than they are, and you can find these properties very cheap when they hit that button. All right, guys, so right now we are in the recession phase, and typically there's only one type of investor that's gonna love and take advantage of this. So if you're an opportunistic investor, this is exactly where you fit, because you're gonna be able to buy properties at rock bottom prices. REOs, which means real estate owned by banks, foreclosures, all of that things, this is where you're going to buy these. So let me tell you a little story. A company called Blackstone that started with $400,000, borrowed some money from the bank, bought about $10 billion worth of property, spent another $2 billion fixing them up so they can turn them into rentals, and created a $25 billion company. This same company was spending $100 million a week buying single family residents until they built a very large portfolio. All right, before I leave and end this video, I want to give you two important things to remember. That during these 4 phases of real estate, they don't have to happen in equal times. So just because the recovery phase takes 9 years doesn't mean the expansion phase is gonna last 9 years. You have to pay attention to the market to be able to predict when each one is coming and going, and that's completely up to you. Second is that each one of these phases doesn't mean it happens across the country all at once. It typically be regional. It could be that California is in a recession and the East Coast may be in a recovery. Whatever that means. Typically is that it doesn't need to happen all at once. It could be market by market by market. Right, if you remember these two things and pay attention to the 4 phases in the real estate cycle, then you'll be well equipped and fit to handle whatever's coming your way. You'll learn how to adjust your business or your investment strategy so you always stay ahead of the market. Now, if you like this video or learned anything from it, please take the time, smash that like button, hit the subscribe button, turn on the bell so you know when I'm posting new content, and share this with a friend if they think we're still in uncertain times.